Good afternoon, everybody. It's Brian Shannon from AlphaTrends.net. Today is Wednesday, June 16th, 2010. That's my sister's birthday. Actually, my mother-in-law's birthday as well. So happy birthday, ladies. Today, the S&P 500 lost 4 pennies. So basically, it held on nicely, I thought. We had seen early on that it did come down on that gap and test the pivot level, which I had said in the on AlphaTrends blog this morning that that was going to be a level that it would be nice to see it come down to. I wrote that last night, was the pivot, and then maybe be able to bounce. And the more important level, of course, is the break, the area that we had broken out from. Let's just go back to that 65-minute time frame, which is right at about 111 even, really, you can call it down to. So today we did hold above that, and that basically gives us another higher low. I was mentioning late in the day today that the S&P was trying to, or struggling with this trend line that it had hit on the June 9th lows and the June 14th lows, and we did manage to bounce a little bit in there from that level. It seems as though maybe the market's running out of breath a little bit. It has come pretty far pretty quickly here, and still a lot of skepticism about this rally, mainly due to the fact that it has been on diminishing volume. And I'll point out once again that we had a very nice rally this year in an environment with diminishing volume as well. You can see the average daily volume was declining throughout that entire rally. And even though we had a little bit of a spike in here, that was actually while the market went sideways, and then we resumed that uptrend on lighter volume. So I think it's much more important, as I had said yesterday, to review the volume on individual stocks rather than the broad-based market. Especially when you're looking at, there's so many ways to engage the market. You've got the ES, you've got the SPY, you've got 10 or so different S&P 500 funds, and where's the volume really going to when you look at options and all sorts of different ways to access the market. That I think that you look at price action first and foremost, of course. And today we had let's frame it from yesterday. We had the gap lower down towards that pivot, and then we had touched upon the 2-day volume weighted average price. So after taking into consideration yesterday's average price, at this point it wasn't the 2-day volume weighted average price, but the 1 day plus about an hour is where we had found it, and we held above that here late in the day as the market did try to sell off slightly, but it did close back above the volume weighted average price. So today's breadth was a little weaker, 1248 advancing stocks to 1815 decliners. So we're in an environment where I think the market is, there's definitely a lot of skepticism, but we did clear this important level here at the 111 area. And if we can continue to hold above that, that's going to be a pretty important line in the sand here over the intermediate term. That's, again, as we know, also the location of the 200-day moving average. That's the black line here. This line is the 100-day, and here we have the 50-day moving average. So what I was starting to reference as well is that this area, this 111 area, was also important because it was basically a 38.2% retracement of the entire range for the year, from the highs to the lows. That 38.2% level came in right at that 200-day moving average as well. And now what we're looking for is, if this trend can continue to extend itself, we'll be looking for a move up towards the 50% retracement. We're right up here at about this 113.35, and then the potential area of resistance would be that 50-day moving average. Now, as I had said to subscribers, that you look at some of these other markets that really are weaker on a larger time frame, such as the EWZ. This is Brazil. Brazil is below the declining 10, 20, 50, 40 week moving average. Actually, it's back above the 10 week, but for Brazil, we had seen that this market kind of broken past its similar level to the 111 on the SPY, and it's come right up to that 50-day moving average. Mexico has rallied beyond that 50-day moving average. It's also rallied beyond the 61.8% retracement of the range for the year. So, some of these other markets might be leading us and showing us that, don't be so quick to become bearish just because this market is rallying after all this big damage has done. So back to the S&P 500, we have to look at it, I think, more from an intermediate term standpoint, which on a 10-minute time frame, again, we look at the trend line. And now a trend line break doesn't mean, and as I like to remind people this, it doesn't mean that the trend is over. It means that the rate of ascent in the case of an uptrend is slowing, and that's what we seem to have here, is that we're just getting a little slowdown. So what we want to see hold, obviously, are these support levels. First at 111. If the market can continue to hold above 111, then we can look at some of these other objectives that I'd outlined on the daily time frame, up near the 50% retracement area, up near the declining 50-day moving average, and those just become objectives. They're not necessarily a place to sell your long or to sell short, but a place to be aware that maybe that's where the market is going to start to, the balances of supply and demand are going to reach that fulcrum point again and distribute and then maybe turn lower. If you look at one of the weaker sectors right now, it's the retail group. You look at the retailers, and this group has really not bounced very much at all. They were in a very pronounced downtrend here. These, just a real nice pattern of lower highs and lower lows, finding resistance at the 20-day moving average. Right now, it appears for the third time. So when we look at that on a shorter term time frame, what we want to see is what's happening underneath the surface. So when we look at, for instance, a 10-minute time frame, what we're seeing here is that we had seen the market get back above that 5-day moving average. The 5-day moving average began to advance, and then this market kind of made a slightly higher high yesterday. But today, when the market gapped lower, the retailers, they didn't bounce with the rest of the the S&P and that sort of thing. S&P might have, I don't know, looked like that. Instead, the retailers drastically underperformed. They were down 1.3% today versus a 0.04% retreat for the SPY. So when we look at that, now what are we seeing here? We're starting to see more of a transition for the retail holders, in that we've got this 5-day moving average that's kind of flattened out, and we have some support in here that perhaps breaking below this level at about 94.65, the retailers are going to be maybe the first group to dive lower. So we would look at that and say, if you're looking to get short exposure on that, because we have, at that point, we have this lower high, we have a 5-day moving average flattening out, and what would make this market in a downtrend on the short-term time frame would be a lower low. So if we break below this 94.55-ish area, 94.60, where would your stop go? Your stop would go up here, just above this lower high, because that's the definition of the short-term downtrend that seems to be maybe setting up, because if it was to break to a short-term downtrend, right now it's more neutral, but if it's to break to a short-term downtrend, it would put it in alignment with the longer-term downtrend on the daily time frame, and then we would look to say, well, is it going to go test these lows? Is it going to make a lower low? So that's the way we want to look at the S&P, which is that right now the S&P 500 is above the rising 5-day moving average. The 10-day moving average is coming up through the 20-day moving average. And we look at volume weighted average price. And by the way, I didn't mean to not answer it, but somebody asked me on Twitter the other day, what is this platform that I'm using? This is Realtick. Realtick.com is the trading platform. The brokerage firm I use actually got bought out today, which is Terra Nova. They're getting bought out by Lightspeed. But anyways, the level I was referencing the last couple of days was the volume weighted average price since the high for the year. Basically, it seems as though, now maybe it's a coincidence, maybe it's not, but since this market peaked, the average price has been right here at about 112.20. So that's an important point. Whereas if this market can kind of get above and hold above there, well, the average participant since the high will actually be making money. They're now basically break even since that level. Now, that's obviously a thumbnail sketch. It's not to say what the average participant did, because a lot of people puked their positions in here maybe and rebought them. Who knows? Yesterday. We don't know what the individual does, but we can look at it and say what makes the most sense. What makes the most sense is that if we can continue to hold this support level at 111, then we want to look to see if this market is going to turn sideways and correct through time, or if it's going to be able to continue to chug higher here. And as Derek Hernquist said, is it going to be able to float on? Float on higher. So the market is still in this short-term or more intermediate term uptrend that has a lot of people confused because of the light volume, and a lot of times a good volume can materialize from a low volume environment as it continues to rally and shorts get squeezed, and then people just end up saying that I got to get in, so they start chasing it. Then the volume comes. Now I don't think that's probably what's going to happen. I think we really have to be quite defensive and be able to continue to look at these support levels. And if this support level is broken, we would look for the next important level of potential support to be tested, which is really down near about 109.30, this prior resistance level, which was tested on that trend line. Now the 5-day moving average might offer a little bit of support as well, but anyways, that's the bigger picture for the S&P 500. I'm not going to break down all the markets like that because it just becomes too time consuming. I think for most people to listen through, but the Nasdaq was up 19 cents today. It's approaching that 50-day moving average and being led higher really by the semiconductors. The semiconductors have made it up beyond the 50-day moving average here, and it's trying to hold that level as support. Now I don't think it means that that we had a lot of resistance earlier in the year at that 2880 to 2990 level. So I think that that's still going to be a troublesome spot for this market. So what we want to do is we want to focus on where are the individual opportunities. Well, on the short side, maybe they were in the retail stocks, whereas the long side, as I pointed out mid-morning yesterday, I said these gold stocks right about here. I tweeted that they were starting to look interesting, and today or yesterday afternoon, it actually broke through this 51 level, and then today it was able to finally break above this level that it kind of had that breakout that failed from. So the gold stocks have been performing well, and some of the ones that I've been mentioning in there on Twitter, I'd mentioned yesterday this IAG, which I'd sold the balance of today, but I was involved at 1740, and out of that one up with close to $1 on average, but I'd also mentioned Ego today. Ego really not quite getting going yet, but I would keep an eye on Ego above 1750 or so. This is a nice looking daily chart. I had also gotten involved in this GFI. GFI, I don't know why I'm not fully trusting of it, so I had sold my position in GFI, but got involved at 17. I forgot what the number was. Let me see if I can take a look. That's why I'm looking at Ego. GFI though, I got involved right here, and this is where I tweeted it as well, that it looks like it's getting going, and so I took a little bit out of that. The real nice one that we had for subscribers today was this Newmont Gold right here, and Newmont Gold is looking real bullish on some big volume. So there's good opportunity appears in the gold mining stocks, and gold physical is holding up in here, and as I've been pointing out, there's this cup and handle here on the potential for this cup and handle developing on this 65-minute time frame. I think that Phil said something about that is Phil Pearlman. I think he might have been actually referencing. I didn't see his video. I bookmarked it to go back, but he was talking about a cup and handle as well in gold, and that he thought it looked good. And we've got these higher lows in here for gold. We've got a rising 10, 20, and 50-day moving average. It seems like this group should be able to continue to move higher. So right now, what I'm going to do is I'm going to take a look at anything that you guys want to. So if you have a stock you want me to take a look at, go ahead and type that into Twitter, and I'm going to conclude this in about 5 minutes. So let's see if you guys get something in there or not. Looks like there's not any questions right now. So let me just take a look at then. How about we take a look at the Russell 2000. Russell 2000, 67 has been its important level, and you can see it got up to that 67 area today, and kind of got rejected. Not really. I mean, it tried to break out, but failed to hold on. So that's kind of a cautionary flag. It's not that it broke out, but it failed to hold, but kind of broke out from an extended level. What's the essence of trend here? I think that this trend line probably represents that best. So I think that a level for the Russell that we want to see hold here over the next day or two is probably about 66 and a quarter or so. So I do have a couple questions here, and first let me do this. Thank you for the retweets, Leslie, Jen Evangelist, Derek, and Phil, Lee, Kevin. How about I look at for M Haas 33 for CIT Group, $38 a share. And CIT really looks to me, when I see this activity, which is just a bunch of back and forth activity with the moving averages and a slight downslope to that 50-day moving average, and then we can take a look and say, where is this stock? If right now we can basically take a look at that 38 level, and you can see it's at this prior level of support. Well, TA101 tells us that support broken tends to act as resistance. It doesn't mean it is resistance. It's trying to break through there maybe, but right now it looks really more neutral than anything to me, this CIT, because we have that mixed message from the moving averages, as I said. What's the average volume in here? About 2.5 million shares. So I think that if you're looking at, let's say, a 65-minute time frame, and we can look in here and say it's been recovering. We had the flash crash lows, then this little panic low, but then a higher low. So buyers are getting more aggressive at higher prices. That is, they're taking back control, first at 31, then at 33, then at 35, and we're getting up towards this level that if it gets beyond this 38 and a quarter area, then and that range is even tightening up a little bit, then perhaps we could run up towards $40 a share, 39 and a half maybe. But it just, the daily time frame to me doesn't look like the best long candidate overall. Let's see. How about hey Brian, can you take a look for eBorian? Can I take a look at IGOI and BBND? Just the I'll just look at the IGOI. Only have time for one because there's others here. But IGOI, this is a it looks like a, let's see, what's the average daily volume? Trades 112,000 shares a day. It's right up to the declining 50-day moving average. I think that IGOI is probably going to come back down towards this 150 level, get that 50-day moving average to flatten out, then maybe it can bounce. The weekly time frame looks like it's trying to recover and hold up above this prior resistance. So the weekly chart looks good. The daily time frame, I'd just be a little concerned that the volume is so light. And today it was, it was up on 83,000 shares versus an average of 112, so it's not very liquid to begin with, and it appears as though you need to trade this stock by appointment only. So I would say that I wouldn't chase it. I would expect it to pull back and then maybe get going, but it's really too thin for most people to consider. PCS, let's take a look at this. I've looked at PCS before, and it's had this breakout. It's just stock just can never seem to get moving. Now, I haven't looked at it in about a week or so, but it's right up to the top end of this range. So the weekly time frame I know does look good as well. So let's take a look at that and just kind of change this scaling so we can see a little bit more clearly. Here's basically the area we're trying to break above. If it can get above there, it looks like it's likely to continue up towards these highs near about 1075 from back in September of last year. So PCS, I think, looks like it's getting ready for for a continuation higher. It's battling this resistance. So I think a little pullback and then a run, breakout, then it could get going. So that would be the ideal. Would be a little pullback and then get going. Otherwise, I'd say maybe a stop down near about 870 or so. But PCS looks pretty good to me. How about a look at VRX for Modelo? VRX is in a great uptrend here on every time frame you look at. This is a pharmaceutical. The monthly time frame has just been ramping higher. The weekly time frame, it's had this real nice consistent rally above the rising 10-week or 50-day moving average, and here it's consolidated more through time than price. And looking at a 10-day or the daily time frame, we can see that 50-day moving average. It hasn't closed even below it since, well, all year. It did a little bit back here, but I think it broke a little bit of resistance is the way to look at this. Let's look at a 30-minute time frame and get this out of the way. So it's trying to break past this level here at about 47.75, 48. If it can get above here and hold above here, then I think you're going to make a quick run for probably at least the $50 level and probably even higher highs. So VRX does look good. Do you see big money pinning indexes tomorrow? And if so, up, down, and to what level? THUPKT, I don't know what that is, but that would be a good question for someone like Adam Warner or for Stephen Place. I don't really look at options like that. To me, I get more confused by trying to look at big open interest and that sort of thing. But anyways, I like I said, I was going to end this thing at about right now. But I'm going to answer one more question. When one has a position in a stock that's broken out to all-time highs, such as QCore, how do you suggest one plays it? Well, you just keep raising your stop, basically. If it's at an all-time high and it's trading good volume, which this stock is, it trades, 8 million shares a day. So QCore, yeah, beautiful. It's up at all-time highs, and on the daily time frame, just a real nice pattern of higher highs and higher lows. And that 50-day moving average was tested here. It caught its breath and then kind of had this nasty little shakeout, but continuing to move higher. So that which didn't kill it in here just made it stronger today. And I would say that what you want to do is look at managing risk and saying, well, this prior little resistance area at 1070 might be the level where you want to put your stop on this. Make sure it's holding above its daily volume weighted average price, which today it did. So tomorrow, if this stock gets going higher again, maybe you add to it and sell a little bit on those real nice rips. But QCore is a good looking stock, so I would say you stick with it. Sorry we didn't have time to get through them all, everybody. Thanks for tuning in, and we'll do it again on Friday at the same time.